Hello, traders. It is April 3rd, Wednesday, and it's time for our weekly live event. Got Harry on board. We're going to review our picks. That's how you can tell if this systematic trading approach works. And Harry and I were just talking. I can't recall the last losing trade that either one of us highlighted. And we've been doing this for at least 3 months now. So if you just follow those picks, you have made some money. So my last pick was Verizon. So let's take a look at that one first. VZ, that was from a week ago. And you can see how that stock has been steadily marching higher. More importantly, what's the market been doing? It's actually been drifting a little bit lower. That is power of relative strength right there. So you don't want to get the market wrong, but if the market's not behaving, you still have a chance to make money because these stocks are so dang strong. That's what we're looking for, that institutional involvement. And we had all the signs of why this stock would be a good one. TGT, that was a stock that I highlighted in my Sunday video. So let me bring that chart up and we'll take a look at it. I did have very specific instructions. So this is multi-dimensional. You have to be aware of what's going on. The market hadn't given us much. So I had mentioned I want to see some market support. I'm going to be buying target on an LRSI dip and cross on a 15-minute basis. And when I see that dip right here, I want this trough to be higher in price than this one. Is this higher than this? Yes, it is. Okay, so this would be a good cross for us to take. Now, this is what happened to the stock Monday after the video. Boom, it shot higher right out of the gate. So if you were FOMO Joe frothing at the mouth and you bought this thing because Pete told you to, well, then you weren't listening. Still had a chance to make some money on it. But if you waited patiently, this is where you would have been getting into the trade right in here. The stock is starting to find some support, and so is the market. But we'll get into that in just a minute. Hi, Harry.
Hey, how's it going?
Good. How is your pick doing? How are your trades going in the challenge?
Let's see here. So the pick was CI, and despite all the problems in the healthcare industry, as of late, CI holds up. When I mentioned it was around 362, so if you took the trade, you're in profit. You could have taken profit on Monday, on Friday, even today. So it's still a good pick. Just keep in mind the context of the healthcare industry being dragged down a bit. But as you can see, that consolidation here on the daily chart and the relative strength of the stock, even though we had a huge pullback, not a huge pullback, we had a decent sized pullback in the market, and the market's been kind of certainly not bullish over the past week. CI has held up just like Verizon did. Verizon actually kept going up. So both those picks that we made, once again, I think we were just talking earlier about, hey, if people just came in, watched us once a week, took a look at our picks, those are the picks they took for their trades. They did that all year. They would be doing fine. But, these picks aren't meant for people just to take them and follow them. They're meant to look at why we do them and hopefully learn from that. But, I'm not naive enough to think that that's what most people do. I'm sure most people just grab the pick and try and put it on themselves. But, teach a person to fish, all that blah, blah, blah bullshit. Other than that, the challenge account right now is doing well, just like it was last week. GS is dragging it down a bit. Probably should have closed GS when it was up 6 this morning. But right now I have a bullish put spread on Marvelon. We're going to talk about those in a little bit. 69.68 for April 19th. I bought back the puts on the FDX put debit spread right now. So it wouldn't take much of a drop for that one to turn into profit. I still have Apple on. Apple is doing well today. And obviously I have Goldman on, which I'm holding, which expires Friday. So Those are my current holdings in the challenge account, which is roughly at around 21,000, somewhere around there. Someone asked me to go over the Goldman Sachs play that I have on. Sure, I mean, take a look at the daily chart. It's a little bit choppier than it was, but as you see, that no major support level has been broken on Goldman Sachs, right, despite the drawback. And today you have a nice push up to the top of that compression. You have decent support here, roughly at 409. Doesn't seem like it's going to break below that. You had a gap up on 321. That gap has been maintained and built on. I still like Goldman. I still think it is a strong pick in the financial sector. And so now it's just a matter of, race against time kind of thing that you always get with options, where hopefully Goldman will continue to build as we go into Friday, and then those options will perform. So it's just now a matter of watching. And if I start seeing some weakness in Goldman, I'll just close it for a loss. That's all.
Awesome. Yeah, I like that compression breakout. Yeah, you got earnings coming up. In fact, earnings season is going to start on April 12th. So hard to believe the year's clicking by like this, but in 10 days, we're going to start getting some earnings, and they're going to be bank dominated to start with. I'm going to talk a little bit about the market. And as I do that, I'm going to put up my comments from the chat room this morning. These are my pre-open market comments. And this is what you're currently hearing. The market is its largest losing streak of the year. Mutual outflows are $40 billion in March. We're going to see tax selling in April. Corporate buybacks have slowed down. Bullish sentiment is very high. VIX is so low, no one's expecting a pullback. That's when pullbacks happen. The Fed isn't going to cut rates, and bonds are selling off. The war in Ukraine isn't going well. All this kind of bullshit, I'm sorry, it really aggravates me. And you can see my counter to that. This freaking market is going higher, period. Okay? You read all these little tidbits of information that some of these podcasters or news outlets aggregate, and they are nothing more than cheerleaders. Whatever the market's doing, oh yeah, that's what they're going to be cheering behind. So if the market has a little bit of a retracement, all of a sudden it's nothing but dark clouds. Oh, this is a really dangerous point in the market right here. And so you start believing that, and you start buying into it. And now all of a sudden, ooh, I'm kind of scared. This market's run up an awful lot. And maybe Pete has it wrong this time. Yeah. So we're waiting for a dip. My God, we're waiting for a dip. That's what we want to buy. We've been waiting for it. We're finally getting one. And now everybody has cold feet. Yeah, I'm not so sure. I'm getting nervous. This is what we want. We just have to have some support.
Creepy.
Pardon me?
That person sounds creepy.
The whole idea is creepy. When you look at this, what is there in this price action that should raise red flags and caution? Absolutely nothing. And so this morning, what we were looking for early in the day, we had the ISM services number, which came out. It was a little bit light, and I'm not crazy about these the bad news is good news and good news is bad news. So this was a little bit lighter number, not materially off, but you can see this long green candle. And yes, everybody gets excited that, oh, the economy is starting to soften a little bit. So the Fed's going to be ready to cut rates a little bit sooner. That's what this rally here was in part caused by. But these are temporary little moves. We want strong economic growth, and we should get a really good jobs number on Friday. And so I am looking for the market to be able to move higher. And then we've got earnings season coming up. That tends to attract a lot of buyers. As for tax selling in April, I read that. Somebody posted a comment in Reddit to my post there. What tax selling in April, for crying out loud? 80% of the time, the market rallies in April. What tax selling? Where has there been proof ever? There hasn't. So be very careful where you get your news from. Follow price. That's truth. That's what the market's going to be doing. So
well, we got
there's my
Powell
rant for
speaking now.
today.
That should be fun. And whenever you come up with, people come up with these things like, oh, tax selling in April and this, just ask yourself, do institutions know about this? I'm pretty sure they do. And do institutions price things for now or 6 months from now or a year from now? Most retail traders do not truly understand the concept of what is priced in or not priced in. Chances are, if something is needling in your brain and you're thinking, well, we should dip because of tax selling or whatever crap you can come up with, if it is relevant, it's been taken into account already. You know, things that haven't been taken into account, like, for example, Powell speaking live right now. Okay, if all of a sudden Powell goes, yeah, I see 5 cuts this year. Okay, the market's going to skyrocket. If Powell says, I'd rather chew glass than cut rates this year, the market's going to plummet because those things aren't priced in, right? Those are kind of outside the norm. There's an expectation of what Powell's going to say here based on what he said previously. That's priced in. If he goes outside those expectations, then you'll see some movement on it. But the idea of what is or what is not priced in is very difficult, it seems, for retail traders to wrap their heads around. I'm not sure why. It's a very straightforward concept, but they seem to have problems with it. It seems to stem from this idea that they can sometimes outthink or be ahead of the institutions. You can't. You won't. Just follow them. That's why they leave their breadcrumbs. Follow those breadcrumbs.
Turn off the TV. Do not listen to those talking heads. Okay? They are cheerleaders. They will misguide you. They will derail your trading. It's going to pollute your mind. Okay? Just watch the charts. That's all you have to do. And so right now we're getting a little bit of a pullback. We're testing VWAP in here. So for those of you who are new to the live event, the chart that I have in the background, you'll see the right edge of it is the S&P 500 so that we can watch what it's doing while we're doing the live event. So we always need to keep an eye on what the market's doing. So just one last point on analysis is that if you do go in and you read that, hey, there's tax selling in April, don't take that as gospel. Go run a search. How often does the market go down in April? Find the results, draw your own conclusions, okay? That's what you have to do as a trader. You've got to do research. Don't wait for me or Harry to hold your hand and guide you through. You've got to find the answers. It's not about asking questions from other people. It's about finding answers yourself. And you got to have that motivation or you're not going to make it as a trader.
Oh, do yourself a favor. Every time you read one of these articles by one of these analysts or pundits or whatever, Goldman or JPM, go to Google and type in the opposite of whatever the headline was. So if it, the headline is investors are bracing for a bearish downturn, type into Google investors bullish market, and you will get a bunch of articles. Chances are by the same publication that just told you that the market was about to be bearish, that says that the market is primed for another bullish run. That's what they do. It's all clickbait. But the exercise is if you just go into Google or go into whatever you use to search and type in the opposite of what you just read, you will get articles that will confirm that point of view as well. Because they always hedge both ways. Barron's, all of them are guilty of this. Bloomberg, you'll get both sides. Just what I posted to Twitter, Goldman basically saying, the market could go to 6,200 and it can go to 4,400. Wow, that's some crack analysis right there. And they get paid a lot of money to basically say that their models have said that it could go either way, up or down. I think they even had a model that puts in a break even. So they have everything covered here. That's why you need to follow price action instead of trying to divine what the hell they're talking about.
And the goal for a lot of these media outlets is eyeballs. That's how they get paid by advertisers. Well, if they come out with sensational articles that, oh my God, the market's going to go down, they're going to have more people watching. And they're going to get you feeling that you can't trade without them. It's just not true. I haven't listened to Fox Business or CNBC in probably 18 years. I don't have it on. I don't have anything on for that matter. So let's shift gears a little bit. I want to talk about swing trading and what's kind of setting up for us. So we're waiting for market support. We've had a very, very dull environment the last couple of weeks. And this is particularly tough for short-term traders like day traders. And we're going to get into a more normal market pattern where we have step backwards, couple steps forward. And there are going to be moments where you have to be relatively inactive as a day trader. You're going to need to incorporate some swing trades into your trading strategy. One of the best strategies that I've found over the last 30 years is selling out of the money, bullish put spreads on strong stocks. The main thing there is you always need to keep an eye on the market. Just need to make sure you're not in a bear market. And the market 80% of the time is flat to higher. So that's why this strategy is so good. So I'm going to run a search. I'm going to show you a very easy search that I created before this event. And I'm going to show you what the variables are and why I like them. Now, what you're going to do is you're going to walk away and go, oh, I got to have that search because Pete said it was good. I'm trying to encourage you to think on your own, okay? It's easy. What are you looking for? What are some of the characteristics that might make sense for a good custom search? Okay, so we're going to go in. I'm going to take a look. First of all, I don't want to trade any cheapo stocks. So please give me a stock that's got at least $20 in value or higher. If I'm going to be selling premium, I'd like to have option premiums at least with an implied volatility of 35 or higher. That allows me to distance myself from the action and to collect some decent premium. If the option IVs are below 35, I'm going to be leaning toward buying strategies. I'd like to have some decent option liquidity. By the way, I'm using Option Stalker Pro. It's a fantastic search engine, as you'll see. So now I'm going to go down to some of the other variables that I could use. Well, first of all, when I sell out of the money bullish put spreads, I'd like to have some support that I can lean on. Well, a 50-day moving average is going to follow the stock up fairly tightly. So I'd at least like to have that support below the stock. And I'm going to be trying to sell puts below the 50-day EMA. I also want to make sure that there aren't any earnings coming up. So no earnings within how many days? Well, I'd like to have at least maybe 30 days, maybe 25 days before the next earnings announcement. And I'd like to have some weekly options. That gives me a chance to sell these bullish put spreads inside of 3 or 4 weeks until expirations. They expire and then the earnings announcement comes afterwards. So now we could take a look and see, well, what the heck is even coming up? And I'm going to add one more variable in here. The stock is below the 20-day moving average. Why did I pick that? Well, the market's been pulling back a little bit. I'd like to see a stock that's had just a little bit of weakness. I'll be able to go through these charts and take a look at what candidates come up. And then we'll flip through a few of these and then we'll see if anything's lining up. So we've had a little bit of a dip in the stock, not bad. We've got the 50-day moving average below. I could put, we want the 100-day and the 200 below, but let's keep it open and see what comes up. So these are going to be some really good candidates. If I'm a swing trader, I constructed this search. I can save it. I can run this in minutes each day, click, 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 click. I'm telling you, in 10 minutes, 15 minutes, I can find some really good prospects that are going to be way out of the money.
Take a look at Moderna, 98.97 bullish put spread on April 19th. Only 2 weeks away.
All right, so there we've got Moderna right in here. And you can see it came up in this search. And let's take a look at that. Expiration was for April 16th,
April 19th, April 19th.
Okay.
And I'm looking at the 98.97, which you can get for 20 cents.
Yeah.
And if you look here, the 200 SMA is $100, and the 50 SMA is $99. So in order for this spread to be in jeopardy in only 2 weeks' time, it has to break through 2 SMAs for your short put to be in jeopardy.
And you can get more than 20 cents, which would be the minimum that we would want. We want to be able to generate a 25% return on the margin that we have to put up. So if you collected 20 cents, you would have to put up 80 cents in margin because there's $1 between the strike prices. And so one of the key things is that we want to be below support when we are selling these because buyers are going to be there. Got AVWAP-E. Got the 100-day, we've got the 50-day, we even got some horizontal support in here. We only have to do this for 2 weeks. That's probably going to generate, with a 25-cent credit, somewhere in the neighborhood of a 28% return based on the margin that we're putting up in 2 weeks. It's a nice spread.
I might put that on right now, actually. I'm going to see if I can get it for 25 cents. Yep, I got it. So I just did it. Out of the money, bullish put spread on Moderna, 98.97 for 25 cents credit. I did 40 contracts. It expires 4/19, and I did 40 that's for the challenge account. There we go.
So another spread that I see, another stock that's here that I'll take a look at is SMCI. And here we've got support at this $900 level, roughly. Stock is at $996. It's a mover. So when I look at it technically, one of the things that I like, and we're going to show you another spread that we like, is the market's been down the last week or so, a little bit more than the last week, but look at how well the stock has weathered this little market dip in here. It's holding up very well. So we're about 10% out of the money on SMCI, and perhaps we can even get below that $900 level. But this is the kind of trade that I'd be looking at. We'll go out to April 19th and see what we can get there. Go down to maybe the 890 strike price. I don't know where these options are going to come in price-wise, but if I did there's our $10 wide increments here. So pretty wide. Probably want to go to another expiration where you didn't have to go $10 wide. I'd prefer to go $5 wide, but it's kind of the exercise that you would go through to see if there's anything that lines up. One that we looked at and I liked, I posted this in the chat room today. I just went to Green Royal Flush and I was taking a look at Marvel. I like this Marvel trade. Harry just mentioned that he put this on. So when I went in and did the analysis here, I was looking to go out to the April 19th expiration, and it was the 68, I believe 66 bullish put spread that I looked at doing for a 40-cent credit. It was there. It's not quite there right now. And so, which by the way, some members have probably pushed down the price of this credit spread because they're already in the trade. whenever you've got an analyst or a guru telling you, this is the spread that you need to do, or this is the option that you need to buy, realize there are hundreds of people doing 10 lots and 5 lots and 2 lots and 7 lots on that exact option. The market makers are going to rake you over the coals, especially for the guy who just wants to get the trade-off regardless of the price. So these are examples, and we're teaching you how to trade. They're examples, okay? As soon as you put a bunch of people into an option, you don't want competition in or out. You want to be alone, and we're teaching you how to find these opportunities so that you can go in and not have 100 other people messing up your market. This is not the same with stock. Stock is infinitely more liquid. But with options, you have to be careful when you're watching a live event webcast. So for this particular trade, AVWAP-E, got the moving averages right here, plenty of support. And here's what I like even more. Market down, 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 marvel. Gap up, hold the gap, inching, inching, inching higher. I love this trade. It's going to be a really good one.
Got another one here from Great One Goofy, who always gives some really good trade suggestions. Bullish put spread on Microsoft. You can go to April 26th, the 410, 405, and you get that for about $1.10 right now, $1.05. You have some great support on Microsoft coming in on the SMA at 410. You have some horizontal support here at around 420, 419. You even have a little bit of upward trend line support here. So you got a lot of support that has to be broken on Microsoft for that trade to go into jeopardy. So I like that one. I think it's a good, a fairly safe bet there on Microsoft.
Word of caution on that one. Was that expiration 426? Because we got earnings on 423.
Let me see here. 420. Oh, yep. Thank you. So 419, 410, 4075.
Okay.
419. You got a 419, and then it's the 407.5, and then the 405, and you should be able to get that in. You're going to need a pullback there. You're going to definitely need a bit. The 410, 407.5. Let me take a look. There it is. Yeah, you just you put that in for 50 cents. You need a little bit of a pullback to get that. Right now, it's going for about 40 cents. But if you can get the 410 to 407.5 in, maybe, or the 410 to 405 in for $1, put those in. Just wait to see if they click. That could be a good one there.
Yep, I like it. And Microsoft does have a tendency to rally into earnings, I'm pretty sure, which we also have a search, and we go over the last 12 quarters. And we measure what the stock has done once it gets inside of that 2-week window before the earnings announcement date. And believe it or not, there are a lot of stocks that have a tendency to rally or sell off into the earnings announcement. And we're particularly interested in stocks that rally into the number, because then that sets us up for selling out of the money bullish put spreads. And so we've got at least 3 quarters of the time, 75% of the time, these stocks have had a tendency to rally into the earnings announcement once it gets inside of that 2-week window. It's very valuable information. And if I go into custom search, let's see. I know we have it, and it's rally into earnings. So I have to find it. But anyway, it's in here. We'll keep the presentation going here.
Keep in mind, out of the money bullish put spreads are math. It's just simple math. The reason you want, when the minimum credit, 20 cents for every $1 in the spread, basically means that you need to have a win rate, let's say, of 80% or more on these trades. Because you're going to be, if the trade that falls through, let's just say you take max loss, you're losing the 4-1, right? So you're looking for, in a bullish market, in a stock that's either in an uptrend or consolidating, 80% of the time within the time frame of your spread will it stay above the 2 lines of support. That's what you're looking for. And that's why the setups have to be correct, because you don't want, if you only, there's only 1 line of support here. Well, every time you reduce your odds, you're reducing it down to 70% or 60%, then the trade no longer works. You need to have that high win rate on these trades. And that's why these setups are so important to get right, because you want to make sure that the win rate that you have is commensurate with the credit that you're taking on the trade itself, and that those support levels hold. Now, there are other ways, there's 2 to 3% of the time you can get out of the trade when it goes against you by buying back the short put, riding the long puts, but that's only if you have experience with it, right? So if you don't have experience with it, assume you'd be closing the trade if your short put falls and it gets broken. But again, it's a simple mathematical equation here of this is the credit you need to get a 25% ROI on a trade, and this is the win rate you need for that type of trade. So your setup has to be correct in order for these to work.
And so in custom search, I did find the field. It's right here. It's called pre-earnings bull. If you click it another time, it would be pre-earnings bear. So these are stocks that rally into the earnings announcement, and I can designate if the earnings announcement is this week or next week or within 3 weeks. And so I just went within 3 weeks and raised the option liquidity rating to 3. So these will be very liquid stocks, very liquid options. These are stocks that tend to rally into the earnings announcement, and the earnings announcement is coming up. So you can see what a nice list to have. And guess what? There's Microsoft right in the middle of that list. So yes, one further note on the option chains and Option Stalker Pro. I think other platforms might have this, but the blue dotted line is 2 standard deviations, and the red dotted line is 1 standard deviation. So you can also see from a mathematical standpoint if you've got those standard deviations working in your favor. But we are also increasing our odds because those stocks have relative strength and they have other technical support levels between the current stock price and our short strike price for the option.
We've got a lot of things piling up here. Let's see. Danny, thank you, Danny. You wanted to say thank you for all we do. Appreciate the time you put in. For everyone troll, there's a bunch of people on the other side that are thankful. Thank you. I hope so. I mean, look, at this point, I just hope for smarter trolls. I mean, the trolls we get are fucking stupid. I mean, give me something to work with. I say this every week. Just be like something, like a criticism, something that makes sense that I could debate. Just, oh my God. It's just amazing how stupid these trolls are, but I guess it's redundant. Uber, daily bullish, pennant bounced off the 100 SMA, back above AVWAP. Relative strength yesterday, green today. Taking a look at Uber. Yeah, I like Uber. I like this bounce off of support. I like the gap up that's held on 214. I like everything about Uber. I do. Uber is a great pick. So Danny, well done on that. Good job on Uber. What do you think of Uber there, Pete?
I like it. This one sets up well for a bullish put spread too. So you've got the gap up, holds the gap, multiple support, horizontal support at this level. You've got the 50-day moving average. You've got AVWAP-E. So if you can get down to like the 72 strike price, maybe a 72.50-70, that's a good bullish put spread. Just make sure you're inside of that earnings announcement date. So April 26, and we go down to not a lot of premium there. That's the only issue with it, which let me show you a really nice feature in Option Stalker Pro that I'm testing. We've added it. We're gathering historical data, but this is historical implied volatility. And so you can see in Uber, this is what the historical implied volatility is for at the money options on Uber. And you can see how they've tanked recently. Well, the reason for it is the stock is compressing. It's not going anywhere. And so we can also, 35 is a rough estimate of where I like to be a seller above 35 IV and a buyer below a 35 IV. And so when we're flipping charts and we're looking for these bullish put spread candidates, we'd like to see it, somewhere above 35 in the 40 range or so. So it's a very nice tool that we have.
I'm looking forward to that. Disorderly says, hi, if you haven't mastered options yet, can you just go long paper dollars? If it's paper dollars, you do anything you want. Look, the steps are in the wiki. I suggest you follow them, starting with the paper and then going to one share. It's all outlined there. Would you mind talking about the risk percent per trade for the size of the account, i.e. 5% of the account per trade? Oh my God, I hate that. I hate it. I can't stand the 5% per trade on account. I could give a shit. Honestly, I don't follow it. I really don't. People have seen me trade. Look, all my trades are public. All my trades are live. You can see what I do. Sometimes I'll put 50% of my account in a trade. Sometimes it'll be 1% of the account in a trade. You can see on the challenge account here how much we're putting in per trade. It varies. How confident are you in the trade? How much do you like the trade? And also, when you're talking about percent of your account, are you talking about percent of the actual number? Or are you talking about percent of the margin number? There's a big difference there. So honestly, I have gone my entire trading career without worrying about that shit. So I'm pretty sure you can too. Any thoughts on allocating a percent of the account to a trade, Pete?
Well, I feel the same way about that. And, everybody's always telling you, you have to diversify. What if? Well, if you're a short-term trader and your time horizon is day trading, then who cares? You're in and out of that position. You just have to make sure that you have a very good entry point and you can trade very large size. Not the novice, but you get into a trade and it's confirmed. I could look at this. I had a question on Dell, so we're going to take a look at it. And I'm on the daily chart. So you can see this rally above AVWAP-E. And look at this long green candle. I guarantee you when I go into the 5-minute chart, this thing is going to be just grinding. Oh, yeah. Look at that. Stack. So if you're a day trader and you see this type of pattern and this type of relative strength and the stock is just marching higher. This is a classic right here. So see how the market fell back and it tested VWAP in here? What did Dell do during this market drop in the last hour? Ka-chunk. When I see the market doing this, I'm adding. Screw the 5% of your account. I'm going in. This thing is climbing higher on what? Massive volume. Do you think this is retail Joe in here buying this? Hell no. There are institutions in there buying Dell right now. Okay. So I'm going to join them and I'm going to lever up for sure.
Of course, by the way, there was news of Moderna right after we put on that bullish put spread, knocking it down $4. Great. Gotta love Moderna. Gotta love that damn stock.
Well, we got something happening in the market here. There's a fairly long red candle. Gee,
sure
I wonder if, I was going to just say, I wonder if it could be Fed speak.
Yeah, it's Powell. Powell's yapping on and on. Kim, Frosty, how's quitting smoking going? It's not going great, I'll tell you right now. I'm still working on it, though. Still working on it, but I've improved my diet a great deal. So there's that at least. But, I'm no quitter. I am no quitter. Wow, there's a lot of different questions here. Can you look at Nike? All right, when you say, can you look at Nike, you guys got to give us something more. We're not just like a vending machine here. Hey, look at Nike. Nike sucks. What am I looking at? I don't know what the hell I'm looking at. Looking at it for what? Are you trying to tell me, is it time to buy Nike right now? Fucking no. Is it time to short Nike right now? Fucking no. So, yeah, no. It's give me something to work with. Tell me, hey, Nike is this and below this and should it this. Don't just say, look at this. We're not your damn monkeys. All right. What is my thinking behind closing just one leg on a bearish put spread like the FDX play? That put was worth 18, 19 cents at that point, and I was taking advantage of the bump up in FDX on a bearish stock. So now when the stock runs back down, I'll just have the straight long puts on it, and I'll have some credit in the bank from what I made on the short puts. That's what I was thinking. That's usually what you can do with those type of spreads when the short put is reduced to pennies, right? Because that short put that's reduced to pennies could quickly turn around and be worth, $2, $3 on a dip, and you don't get the full credit for it. So there's no sense holding on to the short put when it's worth pennies. It just kind of runs against what your objectives are there. And opinion of AAL for swings. I'll let you take that one, Pete. What do you think of AAL for a swing?
AAL for a swing. Let me take a look at it. I did also have a question on timing using LRSI. And so AAL is in this no man's land chop. I mean, you cannot look at that chart and tell me what that stock is going to do from one day to the next. We just looked at Dell and what it was doing on a 5-minute basis. This is what your D1 charts should look like too. Like that, okay? Not like this, like that, okay? We're not trying to predict a bat in flight. We're trying to predict geese in a V formation and where they're going to go. So no, AAL, I hate it, to be quite frank. There's nothing there.
Okay.
LRSI, using it for timing. Which time frames would you use? If you're a swing trader, what you want to do is bring up the chart, and I don't know, I'm just randomly put in AMD. I have no idea what AMD has done, but bring up the chart. You can look at the daily chart, and if the stock has been making kind of normal dips down to that 20 level, you can use that, or you can go into shorter time frames, like maybe a H1 time frame. You're going to definitely get more dips, and you can evaluate how deep those dips have been. Ideally, what you want to see is you want to see those troughs, and then you want to see a higher low during the next trough. And you want those dips, when it goes below 20, to be brief and shallow. And what that tells you is that buyers are getting more and more aggressive, and that dip is going to be a good buying opportunity. I probably could find a better stock than this, but this would be an example where you've got LRSI trough. Okay, now we go into another trough right in here. Is this higher than this? Yes, it is. Okay, then this is probably going to be a good entry point. This is going to be a good entry point. So just use multiple time frames. Again, there's nobody here to answer your questions. You're a trader. You got to figure this stuff out yourself. You're the last person on the planet. We're a resource for you right now, but these are the types of things that you should be asking yourself. How can I experiment with this? How can I find the answers that I see? Well, look at a variety of different charts on different time frames. That's what you have to do.
Here's an interesting one. SWKS, someone writes, what do we think about a 419, 103, 101 bullish put spread for 40 cents? Now, normally I'm looking at this and I would say it's a very good trade because you have three, not one, two, three SMAs. You have the 50 SMA at 105, you have the 100 SMA at 103, and you have the 200 SMA at 103.25, 103.68 for the 100. You have earnings in May, so that's far enough out. You have a lot of support levels there. So great. But then I'm looking at the daily chart, and this thing is choppy as fuck. I mean, this thing is breaking support levels up and down. Yes, the 100 SMA seems to be holding there, but everything about it screams you're right. That is a good bullish put spread. But the choppiness of this stock to me also suggests that you are 2 or 3 bad days away from being in serious trouble.
Yes, and the historical IV study that we have also shows that the IVs are less than 30. So at a glance, you can look at that chart and go, yeah, there's not going to be any premium for me there.
Yep, 100%. Is Costco a good short? Yeah, it looks like a good short right now, but it's a little bit extended from its EMA, so I'd wait for a rebound for it to come up a bit before I'd short it. You're probably going to get a bump up in that, and then it might become a better short. But when it becomes pretty extended the way it is right now, I'd hold off and wait. And yes, Keto, and I do have nicotine patches on. In fact, I sometimes smoke with the patch on. So there's that. All right.
Quick note on Costco.
Dern is never fucking easy. This goddamn stock.
Quick note on Costco. Okay, so, and I get this question quite often. How do I know when to take profits? Well, you see this nice breakout here on Costco way back in November. This is just tight, beautiful stuff right in here. This stock is going to continue to rally. And so when you get this earnings announcement, it has a little bit of a pause. They digest the earnings. Tight as can be, price action, breakout, add. How can I be so confident that the bottom is not going to fall out of this stock? How can I be adding to a stock like this that's already run so far? Here's the answer to that question, is that with all this type of pent-up buying all the way up, I'm going to know when there is a top, when the stock pulls back, the dip is substantial, and then when it struggles to get back to that previous high. That is my double top. And on a long-term basis, this is when I know that there's some selling pressure. This is when I know that it's time to take gains on a longer term swing. The same principle applies for shorter term trading as well. Now I know it's time to take gains, but all along the way here, I would have taken gains way too early. And instead of adding, which is exactly what I should have been doing, I would have been taking gains on a small position. Oh, let's get back in. Here it goes. Taking gains on a small position. And so I'm just nickel and diming this thing the whole way up, almost scalping it instead of progressively add. And I'm not worried about the backside because the buyers are telling me they are in this thing thick as thieves until I see that lower high double top. Now I know all the way up here, and I didn't miss much of the top. Now I know it's time to get out. And in fact, I might even start watching for signs that there's a good short setting up. I hope this one lesson really helps you because it's super important. This is where you can make some serious freaking hay as a longer term swing trader. Not nickel and diming this thing, adding on confirmation, and you're going to have a large position. Okay, that's kind of the point. But you're able to hold that position because your average cost is way down here when the stock is up here. So you don't have to worry you're going to have your head handed to you. And this is how you make big profits.
It goes right into what Mark Smith is asking. Can you touch on graceful exits on AA 33.5 calls for April 19th that you got on April 1st, and then you took profits today, immediately regretting exiting? Well, first, at least you're regretting exiting with profit rather than what most people regret, which is they exited and they lost money. You're right. You shouldn't have exited. If you look at this chart, everything about it says add. You should add to those calls. You could have added another couple of calls to them, average up. People hate to average up. It's what people don't like. You know, everyone averages down. No one likes to average up. But averaging up is how you make money. So in that case, you should have averaged up. When you look at it, you know, sometimes it's fine. You want to take profit, right? I mean, sometimes there doesn't need to be some huge reason behind why you're taking profit. But Sometimes you look at it and say, is there any reason I'm exiting other than I want to take profit here? And if the answer is no, that's the only reason, well, you should either maybe stay in or add to the position because it's just as good, if not better, than it was when you first entered. AA looks like one of those charts that, let me see, when is earnings on AA? 417. You still have time for that. And then is it a rally into earnings stock? Let's take a look here. Buy into earnings. I believe AA is a rally into earnings stock. So yeah, there was no reason to exit. But again, sometimes people exit because they have profit. It's not a big deal. But sometimes you should not be afraid to average up your positions.
And so when you're in this position, a couple things, my take. Number one is this is not an all or none game. Obviously, if you're trading one share or one contract, it is all or none. You're either in or you're out. But if you have a larger position, you don't have to sell all of it. Sell some of it if you're nervous, okay? So scale out, but there's nothing in the chart. What in these bars here told you that this was not going to be a good trade? There's no overlap in these bars. There's very little retracement into these bars. The stock has been super strong relative to the market. So the market's kind of waffling around and drifting a little bit lower. What is the stock doing when the market is doing this? March, 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 higher. So, if you gave up one of these long green candles and you closed with a long red candle, a bearish engulf, or you gave back more than half of this candle and closed on the low of the day, okay, that's a little bit of sign of resistance. Then maybe take half the position off and see what happens with the rest of it. If you get followed through selling, okay, I'm out of the rest, but I made money. You're just not seeing any of that in here. There's no indication that you need to be out of this trade.
Okay. I'm all or none, work 500 to 2,500 this year, trying to keep the growth. Okay, yeah, good job. Let's see here. So this, look, if you are an inexperienced trader or someone who's just trying, doesn't have a lot of time to spend to constantly monitor the account, which is a lot of you, what we mentioned earlier, and look in, Pete's articles are detailed on it. There's a whole thing, couple of things in the wiki on it. These out of the money bullish put spreads are great ways to do passive income. In fact, don't stare at it every day. You're going to see it oscillate back and forth. All that matters is by the time your expiration date comes, the price of the stock is above your short put. That's what you're looking for. That's what you're set up to do. So this is, these type of trades, I remember back, we always mention it, but back in 2020 and 2021, we ran over 300-400 of these, and it was like 94-95% win rate on them. It was extraordinary. Everyone was just cashing in on all this passive income. You did 50 contracts at 20 cents. Well, that's $1,000. That's $1,000 as long as the stock stays above that price. And that's really what you're looking to do. It's, you're not selling the puts. You're not going to get assigned here. You do need to watch out for, you don't want it to close in between your short and long puts, right? Because that's where assignment can happen. But, barring that, you're just looking for the stock to stay well above the the short put price. And if you set it up correctly, you can make some excellent passive income with out of the money bullish put spreads. And really, you should at least have one on. And if you do that, then every month you can have one close, make another thing. You can make $1,000 a month on these with just, 50 contracts on a 20-cent one or 10 contracts on $1 credit, and just let them run out their time and go.
Yeah, I've got 2 1.5-hour videos on my YouTube channel, part 1 and part 2 on selling bullish put spreads. So go check those out. They're about 7-8 years old. Same content, still valid. I had a question on VLO. It's beautiful, looks great. You've got the flagpole here, bullish flag breakout. excellent volume. Energy stocks have been relatively strong. MPC is another refiner. There does tend to be some seasonality to those stocks as well. They tend to do well into Memorial Weekend. So people are traveling, they're driving. Gas prices tend to be higher, but there's some other fundamental factors in play there as well. So yeah, these stocks in that sector are super strong. Would I jump in here? I would want to see a pullback to that EMA 8. I don't like when stocks are chasing way above it. So I'm not a buyer here. If I were in it, yes, this would be a place to add, especially on that little confirmation, on that little bullish flag breakout. So now you've got a position here and a position here. If you get another pullback and it touches that EMA 8, okay, that might be another decent entry point, and then you can continue to add to the position. So that's how I would be trading it. Would I be exiting it? No, I wouldn't be taking gains on it either. The stock looks great right now.
Other than that, I'm just kind of having fun in the last couple of weeks on these MSTR straddles. It's a little bit more advanced than our audience here might be used to, but they're just kind of fun to follow. I mean, look at the IV on that stock. If you just look at the ATR alone on MSTR, so you're looking at a $208 ATR on this stock. On the stock, which is insane, plus or minus. And then you look at what a straddle, like right now, if you straddled this stock, it would cost $150. So your daily ATR here is actually 33% above the cost of the straddle. That is a sign of a stock that's just so volatile, they don't really understand or get yet, or haven't calibrated yet how to account for it in the market pricing. But when you do a straddle here, for example, if you did one right now for $150, which is $15,000 just for one, so obviously it's pricey. But at the 1680, you're looking for a $150 move in either direction. Well, with an ATR of 200 a day, that to get that move by the end of the week, that's a pretty solid deal. Obviously what you have to watch out for is the stock oscillates and stays exactly where it is, which is what happened last week, which is when I closed the puts, the calls for profit, and then I bought more puts at a reduced rate and then let it drop and then took the profit there, made a nice return on it. Even though it finished pretty much where it started, I actually made a really good profit on the trade. So it's also a trade that you have to keep an eye on. And really gauge when to take profit. Like I have an order in right now to take profit on the calls of MSTR at break even for the trade. That's what you want on a straddle. If you can close one half of a straddle at absolute break even, so I spent 210 on the trade per contract. If I can close those calls at 210, then anything I get on the puts is going to be profit at that point. I could just sit there and let the puts run through Friday. And if MSTR drops and the puts go up, that's all profit. If the puts expire worthless, I don't lose any money because I'm break even at that point. That's your best case on a straddle. But I'm straddling this because the ATR of the stock is so much higher than the cost of the put of the straddle itself.
What's been your experience as far as the liquidity, and what kind of how have you been able to work the bid-ask spread on the options? Are they fairly flexible on them?
Yeah, fairly. I mean, the volume on it is actually pretty decent for a stock like this and for prices like this. And I'm only doing, I'm doing 10 contracts. I mean, 10 contracts at $210 is 210,000. But so I'm not doing a lot. If I were doing 50 to 100 contracts, I'd probably worry more about getting out. But on the bid ask, right now for the 1675 straddle, the bid here, the mid is 224, goes up to 235. You'd put that in probably at around 227 and just hold it there. And oh, sorry, wait, no, that's not right. 81, 74.
Looks like 143 by 143 by 158.
Yeah, so you put it in at 150 and see if it clicks. If you don't get it, you don't get it, and you wait. But I would put that in around 150. I always, put it right at the mid and see if you get it. And then obviously on your exit, I tend to exit each leg separately. So that becomes a little bit easier because I'm not looking at a bid-ask spread on a straddle. I'm looking at the bid-ask spread on the call or the put itself.
Okay, I'm going to get my pick of the week in here. And this is something that I looked at earlier today. I like it. Micron has normally been just, a choppy go nowhere stock. And, they're in the storage space. So nothing too exciting, although they did have a really nice gap up here. And we like to give this about 5 to 10 days for the bid to settle down and make sure that the stock is holding all of the recent gains. And you can see how it has been marching higher. The only thing I would say here is I'd like to see it get a little bit closer to that EMA 8. And it was very close early this morning, but it's starting to kind of distance itself from it. So I'd be a little bit patient in here, but I like this price action. And Barron's ran an article. I think that's what's got some excitement in the stock right now, that Micron is actually developing some very powerful AI chips. Well, glory be. That's all you have to say is you're working on some AI chips.
Yeah, seriously.
The stock will take off.
I am going to choose, I really like MU, but with earnings coming up, a rally into earnings and all of that, I am actually going to stick with my Goldman pick. I like Goldman. I'm taking Goldman. I like the price action today on it. I like the recovery, the fact that earnings are coming up around the corner, 4:15. I think we're going to have a rally into that. Yeah, I like Goldman here.
I like it too. I like it too because of that compression breakout for one, and for two, you've got that long green candle, and now you're up towards the upper end of it. So the stock doesn't move anywhere fast, but it's been able to hold these gains, and buyers have shown an increasing appetite for it. You can see these higher lows right here when the market has been going down during the last week. So market down, and you can see how higher lows, and it's very close to breaking out and staging another leg higher. Earnings on 4:15. So that is that a Monday?
That would be weird.
Yeah, maybe it's Friday.
4:15 is Monday.
All right. Well, that's almost a little better because then you get to see kind of what the reaction was to JP Morgan and some of the others that are going to announce on the 12th. So, gives you another day to work with as far as I'm concerned.
Indeed.
All right.
And I repeat, you're working on, you worked on some new articles that you have coming up, including now one trading as a business. I'm working on another Wiki 2.0 entry. So there's a lot of information out there for people right now, more than ever.
Yeah, I'm writing as hard as I can. I want to finish my book. I'm going to be pushing hard until probably June. Take a break this summer, and then I've got about 1 to 2 months of solid writing this fall. But everything's on track, and some really good
writing as a business. I mean, if more people did that, if more people actually realized, hey, this is your fucking job. This is what you do. This is your business plan. This is what you should bring in a month. This is what you should be outlaying, et cetera, et cetera. You wouldn't be so worried about your day-to-day or trying to go for those home runs on that one out of the money, puts or calls. Like, a business can't survive on that volatility. There's no business that can do that. Plus, you wouldn't have people go, well, I'm up for the day. I'm going to stop now. I hit my goal. Like, that would be like a business that is filled with customers doing great that day. And they go, sorry, everyone, we're closing up. We hit our goal for the day. We can't serve you anymore. Fuck that, ride it. You're obviously hot. No, it's people need to. It's such an important topic for people to wrap their heads around, that this is a business. This is not gambling. This is not a scratch-off ticket. This is actually your job, and jobs require consistency. They require a salary. They require something you depend on. If you and your family are depending on trading for bills, for mortgage, for lifestyle, for everything, you want consistency. You don't want huge months and then huge losses. You want consistent months that you can count on. You need to be able to count on that to know that you can pay the bills and balance your budget and all of that. That's what trading is supposed to be about.
Yeah, I get into a lot of the other issues as well. It strains your relationships with your spouse. There are health issues that come up because you're sedentary all day, health insurance, just making sure that you've got that passive or that secondary income for as long as possible. And somebody is trying to get through to me on the support chat, and they're driving me freaking nuts, quite honestly. So I've got to make sure.
I'm a trader, by the way, so
I got to make sure I shut this thing down.
You do it. All right, I think that's it for today.
All right. So in any event, yeah, there's so many issues. Setting up LLC, setting up a 401k within your LLC, business write-offs, all of these things need to be taken into account. You don't need to jump into this right away. It's something that you ease your way into. And if you don't have the passion for this, don't do it, because you're going to have to put so much time and effort into it. You're going to have to learn intensely and have this insatiable quest for knowledge and information and creativity to go and find answers. Most people, they don't have it. I'm sorry to say they don't have it. But if you get through the beginning stages of your journey and you find that the market's all that you can think about, okay, and this is not just, gee, I've been passionate about trading. Oh, really? How long have you been doing this? 1 month. I'm talking about this for years. You've been wanting to do this, and you've been really making strides toward doing it. Okay, this is probably right for you. And I tried to get into a lot of the issues that you're going to face. And so having that backup income, having that secondary income, asking yourself questions about, I'm going to be closing a door to my previous career. What's my skill set? What if this doesn't work out? Can I still go back and generate that income? And so I think these are really important questions. Yeah. And then gradually how you can get into it and what your mindset needs to be. And yeah, to Harry's point is making sure that you never have to hang up the out of business sign.
You do not want to do that. And let me repeat over and over and over again. And say it to yourself, I will not be profitable in the first 2 years. I will not be profitable in the first 2 years. Stop expecting it. Stop getting disappointed when you aren't. Stop going, I've been doing this for 8 months and I still haven't made a dime. No shit. Good. You shouldn't have. In fact, you shouldn't have been risking that much of a dime to lose. You should be trading one share. You should be going through the steps. You will not be consistently profitable until at least 2 years. Wrap your head around that. So if you're I'm going to quit my job, I'm going to full-time trade. Not until you are consistently profitable, you shouldn't. Until you can prove to yourself, to whomever, that month after month after month, hey, I took out this amount from my account as profit and deposited it into my bank. End of month. Oh, I did it again. Next month, I did it again. Next month. 4, 5, 6 months in a row, you did it. Okay. Now you could say, I'm pretty confident that in the 7th month, I'm going to be able to do this again because I got it. I got the method. I know how to do this. Now I can start looking at this as a source of income. Now it's just a matter of how much money do you have in the account? How much income can you expect? Is it enough for you to leave a job and do this permanently and so on? But until you get to the point where you're on month 5, 6 in a row, that you have just taken money out of that account, deposited it into your bank and said, that's my profit. I got to, you pay tax on that, all of it. You're not even close to ready to think about doing this as a job. Can you get there? Yeah. Nobody's born a trader. This is a learned skill. No doubt in my mind, learned skill. And if Pete and I didn't think this was a learned skill, we wouldn't do this. If we thought, hey, you're either born with it or not. All right, look, some people are born fucking stupid. And if you're buying stupid, I'm sorry, it does require a certain amount of intelligence to be a trader. Beyond that, and even more unfortunately, stupid people used to know they're stupid. They don't quite know they're stupid anymore. Stupid people actually think they're smart now. So I can't help you. If you're an idiot and you think you're smart enough to trade, okay, Dunning-Kruger yourself into oblivion. But for the rest of you, it is a learned skill. You can do it. Just have reasonable expectations. Treat it like a business. I look forward to Pete's article. And thank you, everyone, for watching.
Yep. All right, everyone. I think we're going to do a wrap up here. Learn how to sell out of the money bullish put spreads. Look for those 2 videos on my YouTube channel. They're very detailed. It's a great bread and butter strategy for swing trading, which is something that you're going to need to consider now that the market's getting into a more of a normal pattern. Part of becoming a professional trader is that your income goes in cycles because the market is also cyclical. And so you're going to have periods where you can't count on every day I'm going to make $500. You're going to have these cycles, and you need to know how to smooth those out and how to weather those little bumps in the road. And that's just another frustration of being a professional trader. So thanks again for watching. Trade well. We're going to see you Sunday.
Bye, everyone.